Welcome back to your YoERP web app training series. In videos 9 to 11, we created an invoice, approved it, and recorded payment. Sometimes you must correct or reduce what was charged after the invoice is posted. This is checklist step: create a credit note. A credit note lowers what the customer owes for returns, pricing fixes, discounts, or VAT corrections. You do this instead of editing the original invoice. So when do you use a credit note? You use a credit note when the customer returns good, when you charge the wrong price or quantity, when you give a goodwill discount after invoicing, when you need a VAT correction. A debit note does the opposite. It increases what the customer owes. This video focuses on credit notes. Debit notes use the same screen with a different button. This checklist opens credit and debit notes, the list 8 adjustments. In practice, you usually start from the invoice you are adjusting. So let's go to sales invoices. So let's open a posted invoice. So this is a posted invoice. On a posted or approved invoice, click credit note. Then your YoERP opens the credit note form with the invoices lines already loaded. The top section confirms which invoice you are adjusting and which client it belongs to. So this is the invoice number, and then the client is OK Zimbabwe Limited. Then you have to set the credit note date, which is usually today's date. Then you have to pick the reason for the credit note. Return means goods came back. Pricing error, wrong price on the invoice. Discount, that's goodwill or agreed reduction. VAT correction, that is tax fix. Cancellation, sale cancelled after invoice. Then other with notes below. So let's select return. So for each invoice line, enter adjust quantity, how much you are crediting on this note. So we are going to adjust the quantity here, let's say 1. So we have got the invoice, the quantity, which was the original quantity on the original invoice. Then already adjusted means credit notes already issued against this line, we've got 0. Then we have got unit price and total price. So we have already entered adjust quantity. So for inventory products, a return on a credit note may increase stock when the note is approved, depending on the process and whether goods goes back to the shelf. So we also have to put description notes for audit trail. So let's say customer returned damaged item. So after adding the description note, we can click create credit note. So this saves the credit note usually in draft status first. So as you can see, it's a draft, so you have to approve just like we did on invoices. So let's click approve. So you have to confirm, yes, approve it. So after approval, the status becomes completed. That reduces the customer's balance on the linked invoices and updates accounts. So if the original invoice was fiscalized for Zimbabwe, you may see Fiscalize on the credit note after approval. Fiscal credit notes follow the same compliance rules as fiscal invoices. Full detail is in the fiscal devices training. So on sales credit notes and debit notes, let's click there. So this opens and shows a list of all credit and debit notes. We can filter by document type, and we can also filter by status. Okay. So on the invoice, you should see the credit note linked in adjustments or balance history. The customer's outstanding balance drops by the credit note amount. If they already paid in full, credit may sit as credit balance or require a refund process. So follow your finance policy. So the knowledge-based accounting module explains when to use credit versus debit notes and how they differ from journal entries. So thank you for watching this video. Let's meet again in the next video where we create a purchase order.